Welcome back, y'all. Today I will be discussing the top three Chinese stocks in terms of market cap and what opportunities they can present due to the fact that they have each dipped over 5% on their last trading day. So let's get started. First, let's talk about the biggest Chinese stock out there, which is Alibaba. As you can see, it's down over 5% last Friday and it was down around 7% maximum on that day. So as you can see, the 1 month chart is pretty flat, down 5%. Their 1 year chart is 56%, and their 5 year chart is 222%. As y'all can see, Alibaba has exploded and has grown really, really fast and is often considered the Amazon of China. Their earnings are coming up August 20th, which is really interesting to see. Amazon beat by a lot, so I expect Alibaba to have similar results. So many people don't know what Alibaba is. It's basically, again, it's the Amazon of China. However, since it's a Chinese stock, it does carry risk that American corporations don't carry. For example, Chinese stocks are under less scrutiny in comparison to American stocks like Microsoft or Amazon or Apple, as regulations may vary from country to country. And why did Alibaba specifically go down? Due to the fact that Trump signed an executive order to limit Chinese stock purchases, as well as banning Chinese platforms like TikTok and Wechat on September 15th. Now, let's talk about the second biggest Chinese stock out there. The next stock is Tencent. As you can see, Tencent is down over 7% on the day and was down around 8% maximum on Friday. The 1 month chart is down 8%. Yearly, they're up 55, and in the 5 year, they're up around 265%. Very similar charts to Alibaba. However, they are a much different company. So Tencent is basically a multimedia conglomerate, which they have many applications. They have phone services, they have video games, online advertising, fintech, business services, and many other things. So actually, Tencent is the largest OTC stock out there. Um, went delisted couple probably in 2006, 2007 was a $3, $4 stock, and then it rose up all the way to around $67 a share. So why did Tencent fall harder than all the others? Is that Tencent owns Wechat, and Wechat was one of those stocks which are about to be banned in the United States on September 15th. They pay a very low dividend with a high PE ratio, but Tencent is a very big company in China. Now, let's talk about the final stock. Finally, let's talk about JD.com. It's down around 4.5% on the day. It was down around 6% maximum on Friday, down around 9% a month. It's up around 126 on the yearly chart and around 90% on the 5 year chart. So, what is JD.com? It's essentially Alibaba 2.0. It's an e-commerce company. It's relatively newer. It's not something we have in the United States yet, but it operates in China. Their earnings are usually really, really good, and they beat most of the time. Their earnings are happening August 17th, which is next Monday. Um, they don't have a dividend, but their PE ratio is really, really high due to the fact that people suspect this to be a very high growth company. And people even expect JD to take over Alibaba's #1 e-commerce spot in a couple of years. I personally don't see that happening, as their sales and profitability does leave many, many question marks on the table. Now, let's discuss out of these three stocks, what stocks I will buy and what stocks I already own. So the thing about Chinese stocks is that you have to be very, very careful. There are several large cap market companies from China who have been under fraud investigations, who've already conducted fraud, and have even been delisted. One example of this can be Luckin Coffee. Luckin Coffee was a $50+ stock, but due to fraud allegations, dropped all the way to below $1 a share. And that market cap was around $50 billion. And that was a very, very big deal. So I have past experience with Chinese stocks. I believe they're very volatile and they don't always follow US market, so you have to be very, very careful. However, on this account, I have started an Alibaba position. It's very, very small. It's only $5 worth. But I will ease myself into it. If Alibaba continues to fall below 250, I will keep buying $5 almost every day. I believe Alibaba is a good growth company. Their market cap sits well below Amazon's $1.2 trillion market cap. I believe it can catch up and be, a future player in the industry, but we have to see. Tencent is coming in at number two. I will be buying Tencent if it goes below 60, which I don't see happening anytime soon. But if it does, I will. They have a very strong international hold, which is quite interesting. They own Wechat again, which is one of the most popular messaging apps. And JD for me is really too expensive. For me to buy JD, it has to come down all the way to 30s and 40s. Because of their high P ratio, it does not make sense for me, even though I don't think there'll be much growth in the company. All right, folks, there you have it. I was not invested in any of these companies, but I have started positions in Alibaba and will like to add more to Alibaba and Tencent if they continue to drop. Thank you guys for watching. I will be upgrading my mic soon, and I hope to see you again. Thank you.